Good morning. Michael Doherty here, and with me is Dan Marks.
Morning.
Here to have a quick wrap up on how the share market's been faring over the week. And certainly, Dan, tough week on the market, down about 6% over the last 3 weeks.
Yes.
So we've sort of
Gave
getting
up
close to our
this year's gains in 2 weeks.
That's the problem with this
much.
game, isn't it? You go up on the escalator but come down on the elevator,
Very quickly.
and we've certainly seen our markets retract very quickly.
Yeah.
Stock that I've been having a look at maybe is more of a top-up potential, particularly as prices come down. The big Australian BHP Billiton, trading at the moment in the low 34s, came out with not a bad full-year result there a month or so ago. Disappointed the market to some degree. The market was expecting a share market buyback. That didn't happen. But BHP trading at the moment around about 13 times on future PE. Dividend yield is about 4%, which traditionally BHP has been a pretty measly dividend payer, but they have cranked the dividends up over the last couple of years. And only a 55% payout ratio, so still a fair bit of fat in the system there.
There's a bit of talk too, Michael, that once they split their business, they're going to become a real retirement income stream. The good part of the business anyway.
Yeah, absolutely right. Yeah, that was one of the big parts of the result, wasn't it? The confirmation that Newco would be demerged out of BHP. Basically, some of the coal, manganese, silver operations, where BHP will, the core business will continue to focus on iron ore and copper.
Yeah, there was an article where they're really pushing, plan to push into copper because they can see a shortfall by 2016.
Absolutely, and of course copper and iron ore are still two of the key base metals around the place. And interesting too, Dan, I know we've been speaking about it for a little while, on the franking credit front, BHP ran about $13.5 billion worth of franking credits on the books.
So that's up $3 billion since they reported.
That's exactly right. They had about $3 billion of franking credits each year to the franking account. Just extraordinary. To give that some perspective, the market capitalisation of Santos is about $13.5 billion. So
BHP hold that in franking credits.
Absolutely. So potentially more off-market share buybacks maybe on the front for BHP, maybe even some special dividends and a few things.
And the potential to do that when they split the business as well, isn't there?
Absolutely, yeah. No, they could certainly tweak it so that return of that new demerged company could be some sort of special dividend or something like that.
So what have you been selling this week, Mike?
On the sell front, Dan, I've been basically taking some profits out of company Ardent Leisure, AAD. They've basically doubled in price over the last couple of years. They were, in a previous life, the old Macquarie Leisure. Yes. Absolutely, pretty much slaughtered throughout the GFC like a lot of these property trusts were, but Ardent Leisure's done extremely well over the last couple of years. Management's done a great job. PE at the moment is around about 20 times earnings.
It's getting up there, Mike.
Yeah, earnings growth for next year only expected to be about 7%. So the big jump in the share price too has also seen the yield drop quite dramatically. Only paying about a 4% yield, and for a property trust, that's pretty ordinary.
Yes, the other thing about the property trusts is they're starting to pay dividends higher than their free cash flow now. So that's pre-GFC and action, isn't it? So
bit of a worry, absolutely. Yeah, you're exactly right. That's one of the key elements we saw from the GFC was property trusts paying out more in dividend than what they are actually earning. Yes. So a bit of a flag there that maybe it might be time to take a few profits out of that sector.
Look at it.
Yeah, absolutely. Another busy week ahead too, Dan. US, we're getting some employment figures, non-payroll numbers again next week, manufacturing data, and also consumer confidence out of the US. China, HSBC manufacturing PMI. To the UK.
They've been under a bit of pressure this week, haven't they, China? Some of those numbers haven't looked so good, which has impacted our stocks.
Absolutely, yeah. The flash number came out there this week, which looked okay, but yeah, this is certainly the more the figure with more substance as such. So it'll be interesting to see how markets react to that. In the UK as well, they've got their services PMI coming out and also GDP numbers.
Yeah, they were talking about putting up rates this morning as well. So.
Yeah, it looks like they're starting to turn that corner. Yeah. And on the Australian front, not a lot happening next week, but certainly retail sales figures will be something that the market's pretty keen to absorb.
Yeah. And thoughts on that? Another tough period?
Be pretty tough going, you'd have to think. I don't think there'll be anything to get too excited about there.
No. Well, that just about sums us up, I'd reckon.
That's it, Dan. Another busy week for us, so thanks for joining us, and we'll see you next time.
Cheers.